So we're going to do something a little bit different this week and make a reaction video. So Daniel Inskeep is a creator here on YouTube, and he typically makes videos about various side hustles and whether you can make money from them. He's made a couple of videos about day trading, which I've always enjoyed, but this past week he made a video about doing algorithmic trading with bots in NinjaTrader 8, which is totally my wheelhouse. Well, spoiler alert, he lost money doing it, and I'm not saying that I have something that will do better for you, but I saw a lot of the mistakes and pitfalls that beginners fall into when they try doing algorithmic trading. So I thought what we would do is we'd just make a reaction video and kind of go through some of these things that we can use to really help you avoid these problems so that you can spend more time on strategies that are more likely to work.
I don't really think there will be something like this that works for the average retail trader, but I'm willing to put real money on the line to find out.
So I just want to start by saying that to his credit, Daniel was very skeptical about this whole thing from the very beginning.
I am highly skeptical of any trading algorithm sold to retail traders. The bottom line is why? Why would someone who can create a profitable algorithm share it with other people?
So this is totally spot on, but it's really worse than that, because putting a strategy out on the internet can make it stop working. So there is only so much edge that you can pull out of any one individual strategy. These things don't just infinitely scale on forever. And especially if it's a statistical technical edge, the amount of money that you can actually pull out is not as much as you would think. So putting it out and making it available to a bunch of people, they're all going to trade it, and that can make the strategy stop working very quickly.
It's developed by a woman named Lauren, who often posts her results and results of her members on social media. And to be honest, it all sounds too good to be true.
Oh yeah, that's the bold approach lady. Yeah, I know who you're talking about.
One guy said he hasn't used it lately, joined in the early stages where more testing was needed, more testing was needed, more testing was needed.
Yeah, so I just really want to stress that the solution to all of these problems is a more thorough testing process. And that probably means that you need more data. Like, if the answer to how much data is not, I'm throwing as much data at it as I can, then you probably need more data.
She has like 4 different core strategies that you can run on any futures instrument.
Okay, so here's your first sort of backtest results. And of course, it's exactly what I've come to expect from robot vendors, just the most suspicious backtests you can possibly come up with. I think a lot of people look at these results and they say, hey, this is a really good result. This is making money. But really what the backtester is telling you here is that this result is probably overfitted, if not worse. So what is overfitting? Well, overfitting is where you tweak your strategy to exactly match the conditions of the past. And what that does is it makes it very poor at being able to predict the future. So basically, if you were to take this strategy and test it on a different data set, it wouldn't perform as well. Now, there's a few things in here that I say kind of are red flags that this is probably overfitted. First, it's a very small data set. You're only talking about 3 months. And, you know, if you only have 7 losers in your data set, that means that if you have a bad day where you get like 2 losers, that can completely change the statistical properties of your strategy. But the really big red flag in here is that R squared. So even if you were trying to overfit it, getting 0.99 R squared is super impressive. And that suggests that this strategy is maybe even more than just overfitted. Like, maybe it's cheating the backtester in some way.
So here's how it works. Every night, Lauren posts which strategies she's running on which instruments. Other members follow suit, posting what strategies they are running. It's up to you to run whatever you want.
So this brings us to the next big problem that you'll run into in algorithmic trading, and that is data snooping. So data snooping is where you take a data set and you run a bunch of different strategies over it, and then you select the strategy that worked the best. And the problem with this is that the strategy that worked the best, there might not actually be anything to it. It could just be completely random that was the one that worked the best. And so here again, you get this problem where when you try and put it on a different data set, it doesn't work as well. Now, I totally understand the desire to have something that is able to adjust for current market conditions. So the way that you do this and not fall victim to data snooping bias is with walk forward testing. And NinjaTrader has walk forward testing built into the strategy analyzer. So when you select walk forward testing, what it will do is it will optimize the parameters over over a small data set, say a week. And that's how you can have a strategy that you can run over a multiple year time period, but still have it be adjusting to the current market conditions. And that's really important because markets tend to have fat tails. And what that means is that you're going to need more samples to have a statistically significant result. When I'm doing backtesting, I'm typically looking for something that will have 10,000 trades and 5 years worth of history. I don't know why when people start out, they like to do just like a few weeks or a few months, but I'm telling you, you can run this over 5 years worth of data. It doesn't actually take that long. Now, that is a much higher bar. It is hard to get a strategy to work over a 5-year period, but here I have an example for you. Here's a strategy that is using forward testing, and it's basically based on market harmonics. It works over a 5-year period. I've never traded it myself because I didn't like the Sharpe ratio, but you can see that it can be done, and this is the sort of thing that you should be going for.
And what I realized is I actually set the strategy up wrong. I had it on a 1-minute chart, which is why it took so many trades. Instead, it was supposed to be on a line break chart, which is something I was not familiar with. So I was glad I got away in the green despite my mistake.
There it is. And that probably explains how they were able to get such a high R squared in the backtest. So using non-time-based bars can make your algorithm less likely to translate over to live. So there's kind of two problems that you get in here, especially with line break bars. Although Hike and Ashy are the worst. Hike and Ashy bars are like literally cheating, okay? But you can run into these situations with range and line break bars, etc., where that bar is only a few milliseconds. And so there's not even enough time for your computer to even think and take the trade. So the backtest will say that it got filled, but on live, it's going to be too slow and it's not going to get the price that it wants, or it just won't even be able to get the trade at all. But line break bars are particularly problematic because they're basically creating a new bar whenever the market breaks out of a range and when things are a little bit more turbulent. And that's why you get this sort of a thing.
For a $482 net loss. Meanwhile, my simulation account is up $500 to add a little insult to injury.
The sim account did well, but the live account didn't because the algorithm has basically biased itself towards trades that work well in sim but don't translate to live.
I noticed a lot of people were doing really well trading oil, so I decided to add MCL, which is micro oil futures, to the algo. And this time I woke up in the red.
Oh man, I've said this once, I'll say it 1,000 times more. Oil is just an absolute beast, and I've seen more accounts blown off of oil than anything else. You know, it is that crazy girlfriend like Amber Heard crazy, right? I've lost a bunch of money on oil before. It is just usually not worth it unless you're really experienced or you're going to specialize in oil specifically. The only thing that I see destroy more accounts is NQ, but you know, that's the primary instrument that he's trading. So by the way, he's showing the broker statement here. So what was going on that day in oil? Yep, that was a big down day in oil. So this brings up another point that you should really keep in mind, and that is that you should compare your performance to how the market did. And if oil had a really big down day, you shouldn't be surprised to see yourself down as well. So it may actually be the case here that Daniel got unlucky in some ways, but in the long run, that's going to be better for you because there's going to be people, they get lucky at the beginning and they just spend years chasing that one thing that they thought worked at the very, very beginning. Whereas if you get humbled at the very start, you're going to go in and you're going to try and find things that really have more efficacy over longer periods of time. And in the end, you're going to end up ahead.
But I do believe the strategy analyzer usually gives an overly optimistic result than trading live.
The backtester is a great tool. It's definitely a big help to not have to write it yourself, but it is only a tool and it is limited by you. It can't account for all of the mistakes that we might make in our code. So that's why you always got to test it. I would recommend that when you're running these live, at the end of the day, go back and run the backtester and see if the entries that the backtester say it should have made match what actually happened live. Now, they won't always match up exactly, but almost everybody will find mistakes in there and things that their algorithm is doing that are making their results unrealistic.
One thing that can be especially frustrating is when you have a red day and you see other members posting their results, and well, they're a lot different than yours.
This right here is what really bothers me, right? Like, people make mistakes with algorithmic trading. These are all of the common mistakes that beginners make. But it seems like this whole room is basically set up to cause you to make data snooping biases and feel FOMO for something that you're paying $1,000 a month on, and that the vendor is potentially making hundreds of thousands of dollars from selling. I would expect a lot more, and I can't help but feel that this is all intentional.
And I don't think commissions are calculated correctly on the platform.
Oh yeah, I know what's going on here. Don't worry, Daniel, I got you. This is actually my biggest pet peeve in NinjaTrader 8, because this should be more obvious. But if you go into the accounts in the control center and you right click on an account, go into the properties, and then you can set a commissions template for the account so that the commissions will display correctly within the platform. And if you do that to the Sim 101 account, that will make the commissions show up correctly when you're doing the back tests.
So going off of my last broker statement, I have $1,164 left in my account, resulting in a total loss of $836. But given the cost of everything I mentioned at the beginning of this video, this total experiment cost me a total of $1,473.
Man, it is just so hard for me to look at a loss like that. Look, I understand it's not a big deal for him, and I'm not bashing Daniel in this video in any way, right? I have certainly lost way more money, and really just off of my own stubbornness, okay? But, you know, maybe it's just because it's triggering because I have flashbacks, but I can't stop thinking about how much money was lost that could have been put into more productive things when it was completely avoidable, right? Like, you could have bought a News Squawk subscription. How do people trade without a News Squawk subscription? Or, hey, Daniel, you could buy a PC so that you can trade with a real trading workstation instead of a Mac. But, you know, it's frustrating because I see this from people every day, and there's just a little bit of knowledge of data science that hardly anybody that comes into trading they start with. But, you know, it can save you so much time in the long run. So I hope that this video was really instructive for you guys. I'm sure that Daniel will make another video, so I hope that this information makes his next venture more successful. As for me, I'll see you guys during the morning live stream, so I'll see you then. In the meantime, stay profitable, friends. Or at least, like, don't lose it all, okay?